Hello, and welcome to the Hiring Wealth channel. Today, we're going to dive into the world of investing on the topic investing basics, stocks, bonds, and mutual funds. By the end of this video, you'll have a solid understanding of these investment options and be better equipped to make informed investment decisions to grow your wealth and achieve your financial goals. Part 1. Stocks. What are stocks? Stocks, also known as shares or equities, represent ownership in a company. When you buy a stock, you become a shareholder, which means you own a small piece of that company. Stocks are traded on stock exchanges, such as the New York Stock Exchange, NYSE, and the NASDAQ. Types of stocks. There are two main types of stocks: common and preferred. Common stocks give shareholders voting rights and the potential to earn dividends, while preferred stocks typically offer higher dividends but no voting rights. Why invest in stocks? Investing in stocks can help you build wealth over the long term, as stocks have historically outperformed other asset classes, like bonds and cash. Stocks also offer the potential for capital appreciation, meaning the value of your investment can increase over time. Risks of investing in stocks. While stocks have the potential for higher returns, they also come with higher risks. Stock prices can be volatile, and there's no guarantee that the value of your investment will increase. It's essential to have a diversified portfolio and a long-term investment horizon to minimize these risks. How to invest in stocks. There are several ways to invest in stocks, including buying individual stocks through a brokerage account, investing in exchange-traded funds, ETF, or mutual funds that hold stocks, participating in a company's direct stock purchase plan, DSPP, or dividend reinvestment plan, DRIP. Tips for investing in stocks. Diversify your portfolio by investing in a mix of different industries and sectors. Focus on long-term growth rather than short-term gains. Research the companies you're interested in and understand their financials and growth prospects. Consider dollar-cost averaging, which involves investing a fixed amount at regular intervals, regardless of market conditions. Part 2. Bonds. What are bonds? Bonds are debt securities issued by corporations, governments, and other entities to raise capital. When you buy a bond, you're essentially lending money to the issuer in exchange for interest payments and the return of the principal amount at the bond's maturity date. Types of bonds. There are several types of bonds, including government bonds, issued by national governments. These bonds are generally considered low-risk investments. Municipal bonds, issued by state or local governments. These bonds may be tax-exempt, making them attractive to investors in higher tax brackets. Corporate bonds, issued by companies. These bonds typically offer higher interest rates, but come with a higher risk of default. Why invest in bonds? Bonds can provide a steady stream of income through interest payments and help diversify your investment portfolio. They also tend to be less volatile than stocks, making them a suitable option for conservative investors or those nearing retirement. Risks of investing in bonds. While bonds are generally considered less risky than stocks, they still carry some risks, such as interest rate risk, credit risk, and inflation risk. It's essential to understand these risks and choose bonds that align with your risk tolerance and investment goals. How to invest in bonds. You can invest in bonds through buying individual bonds directly from the issuer or through a brokerage account, investing in bond ETFs or mutual funds, investing in a bond ladder, which involves buying a series of bonds with different maturity dates to spread out interest rate risk. Tips for investing in bonds. Diversify your bond portfolio by investing in different types of bonds and issuers. Consider the bond's credit rating, as higher-rated bonds generally have a lower risk of default. Be mindful of interest rate risk, as bond prices tend to fall when interest rates rise. Part 3. Mutual funds. What are mutual funds? Mutual funds are pooled investment vehicles that invest in a diversified portfolio of stocks, bonds, or other assets. When you invest in a mutual fund, you're buying shares of the fund, which represents a portion of the fund's holdings. Types of mutual funds. There are several types of mutual funds, including stock or equity funds. Invest primarily in stocks. Bond funds. Invest primarily in bonds. Money market funds. Invest in short-term debt securities, such as treasury bills and commercial paper. Why invest in mutual funds? Mutual funds offer several benefits, including diversification. By investing in a mutual fund, You gain exposure to a broad range of assets, which can help reduce overall portfolio risk. Professional management. Mutual funds are managed by professional portfolio managers who make investment decisions on your behalf. Liquidity. Mutual fund shares can be bought or sold on any business day, making them a relatively liquid investment. Risks of investing in mutual funds. Like any investment, mutual funds carry risks, which can vary depending on the types of assets the fund invests in. Some common risks include market risk, management risk, and liquidity risk. It's essential to understand the risks associated with a particular mutual fund before investing. How to invest in mutual funds. You can invest in mutual funds through opening an account with a mutual fund company or brokerage firm, investing in mutual funds through your employer-sponsored retirement plan, such as a 401 or 403 bits plan, purchasing mutual funds through a financial advisor or robo-advisor. Tips for investing in mutual funds. Research and compare different mutual funds based on factors such as performance, fees, and investment objectives. Consider the fund's expense ratio, as high fees can erode your returns over time. Pay attention to the fund's turnover ratio, as high turnover can lead to higher transaction costs and potential tax implications. Investing in stocks, bonds, and mutual funds can be an effective way to grow your wealth and achieve your financial goals. By understanding the basics of these investment options, their associated risks, and how to invest in them, you'll be better equipped to make informed decisions and create a diversified investment portfolio. Remember to always do thorough research and consult with a financial professional if needed. Happy investing! Thank you for watching this video on investing basics, stocks, bonds, and mutual funds, here on the Hiring Wealth channel. If you found this information helpful, please give this video a thumbs up and subscribe to our channel for more valuable content on personal finance and investing.